Hello guys, Chris here. Welcome. I'm really excited to bring to you today what's probably the simplest and most high probability trading system I've shared so far. If winning 9 out of 10 trades or more is something that appeals to you, if you want to know which 3 most profitable currency pairs to trade that are what I term the golden triangle, and for those of you that stay to the end, I'll show you the golden square, which is the 4 most profitable pairs to trade. Now, what I'm going to show you is how combining volume and momentum in a certain way gives the highest probability forecast of price movement. And I'm going to show you how staying out of the market sometimes makes more sense, and staying cash rich is more valid than taking a position in the market at times, and how you can see the best times to stay out of the market. I'm also going to show you how all momentum is not good momentum, and when momentum is confused and how to recognize confused momentum, you need to be staying out of the market. And you'll also discover why decreasing volume can actually be really profitable at times to trade. Now, if you trade intraday, you'll see why you need this information and how it will help in next day direction and momentum probability, and could make the difference to the trading edge that you've been looking for in your intraday trading strategy. So whether you trade this strategy as a daily strategy, D1 strategy, or whether you're looking to trade an H1 or a 5-minute or 15-minute, or regardless of whatever time frame you're looking to trade, this strategy will help you, I would think, really up the edge that you've got so far. So I'll see you on the inside. Don't forget to like, share and subscribe, and see you in a minute. Please pause the video here to read the following disclaimer before moving on. Hello guys, and welcome to this Forex golden triangle system. I'm very excited to bring you this system, which gave you a 100% win rate if you traded this system on the daily chart on these 3 pairs since the beginning of the year. And there are slight variations in how you would trade each one, as each currency pair has its different character. But the sort of results you can achieve are as follows, and this is just a principle. I'm not saying that you're going to replicate this, but just to show you, this gives you a principle of trading so that you can trade this on different currency pairs and different time frames, and hopefully achieve a great win rate. Psychologically, it's better to have fewer trades and a higher number of wins. Sorry, this has gone wrong here. So this should read 15 wins and 0 losses on AUD USD. So not very many trades, but I think you'll agree. If you knew you had 15 winning trades, you would quite happily wait patiently for those. Now on USD CAD, you had on the 9 wins and 0 losses on the first after swing 3 arrow system. And so that's 15, that's 9, so that's 24. And then on GBP USD, you had 10 wins and 0 losses on the 3 arrow first after swing. Now the golden arrow system relies on momentum and volume, and a third factor which I want to discuss now. Sorry, I've closed that chart down. The third factor which I want to discuss now, which is as follows. So traditionally, when we get trend, we look at the market moving down in this kind of way. It makes lower lows, lower highs, lower lows, lower highs, lower lows. But that doesn't really tell us when trend is going to change. So we need to find a better method of working out when trend is changing. So the traditional idea of lower lows and lower highs doesn't take into account price action, which often is all over the place, And like we see here, we've got price coming down, then we've got a lower high, then price going down again, and it's much more chaotic price movement in reality than is demonstrated by these kind of idealized versions of the way price moves. So we've got, as we said before, we've got our downswing, then we've got an upswing, and we may know that the overall trend is to the downward direction, but it's where do we catch those swings? That's where us swing traders make a profit from. It's when intraday traders, if they knew the direction the market was roughly headed in, they could make better trades intraday. So it's very important to be able to figure this stuff out. And so how do we do that? How do we know? So we know what the trend is moving downwards because we're getting lower lows here, we're getting lower highs, and we're getting lower lows. And then the market moves up. How do we know that that's a lower high as opposed to a swing change to the upside? And how are we supposed to plan our trades when we don't know when the swing is genuinely changing to the upside or when it's genuinely changing to the downside? Because price action can, we get two lower lows in a row and two lower highs. We think we're in a downtrend, but and then we wait for price action to confirm finally, and we get into the trade there, and we've lost all of this move before we can finally confirm we're in that trend. And then conversely, the market's going up. We get a higher high possibly there, and another high low there, high low there. So we get in at the break of that point there, and we haven't got very far to go because that move is almost exhausted. So what we want to look for is momentum. We want to look for a change in momentum. We want to look for changes in volume. These are our usual clues as to where the market is going. But we want to add something that we don't normally have to be able to confirm when we are actually in a momentum change to one side or another. So what is that missing ingredient, and how do we get that to up our win rate? And this is what the 3 golden arrows system gives us. It gives us this ability to work out where our normal trend changes occur. And so let's say that normally we'd use our OSMA, the 813.8, to give us an indication of where trend direction is going. So here's our OSMA, and we would be looking for normally we would be looking for a trend. We would see the OSMA coming down this way, and then when we saw the OSMA moving back up, we would think, oh, we've got a change in trend, and price action might be doing this, and then we see price action doing that. But sometimes there's divergences, and we'd also have our volume indicator in there to support what price action was doing. So if we stick in our volume, we've got volume there. And so normally speaking, we would be looking for our momentum indicator to be showing us a downward move, and our volume indicator to be showing us an upward move. And we would be thinking, okay, so we've got increasing volume, we've got downward momentum, let's get into the trade. So trend had been coming down here, and we would be looking for this point here. We would be looking to get into the trade somewhere here. Sorry, I've got this slightly backwards. So we've got trend coming down here, and we see increasing volume, we see momentum to the downside. We enter our trade, and what happens? Suddenly price action shoots upwards. So ideally what we want is something to tell us where the swing has changed here. So we're using our momentum indicator for that. And we're looking for increasing volume, but we want increasing volume as close to this point here. And in fact, we've got an increasing volume here. But how do we know that we're close to that swing point? What's the best way of getting close to that swing point? And this is what the 3-arrow system will address, and we'll go into that in more detail in the next segment. See you there. So this is to follow up from the previous segment, and what we're looking at is when we normally take our trades, we don't know whereabouts in the swing we are, so it's important to try and get into the trade in a confirmed trade when the swing has moved in our direction. Now, generally speaking, we know when swing moves because usually we've picked out the swing point to the downside. Now, I've got an OSMA here, and I can see that the momentum's sort of been tracking upwards here, and then there's a swing to the downside. But that's all I know. I don't know. This is a Sunday candle here, or maybe not Sunday because it's around the 31st of December, but it's a short day of trading. It may be a bank holiday or something of that order. I don't really know what the reason there is, but I know that momentum has come down. And so I'm going to start to be looking for trades to the downside, short trades, but I need confirmation. So normally speaking, if I was looking for increasing volume, I've got increasing volume here. This volume spike is higher than this volume. I know it's a green volume spike, but this doesn't necessarily indicate increasing volume because you can see here that we've got a green volume on a Monday candle, but in fact the Friday candle has got higher volume. So on my platform, a Monday candle is always green. So you need to watch for that and make sure there is in fact an upward slope between the Monday and Friday candle if you have this kind of trading platform. So we've got increasing volume and we've got increasing momentum. Now those give us 2 golden arrows. For one increasing momentum, for one momentum arrow in our favored direction, that gives us 1 golden arrow. If we get increasing volume, that gives us our 2nd golden arrow. But that's not enough. We know we've got a swing point here, so we want to get in as quickly after the swing point, but it needs to be confirmed. Now, as we're technical traders, we know that price is reflecting real-world events, and momentum and volume are also reflecting real-world events. And we know that market makers can push the price around and manipulate price to some extent. So we want confirmation that this is not a real-world price fluctuation, interest rate change, or something that has made this temporary spike in volume and momentum, and that in fact it is confirmed. So the X factor that we were discussing in a previous segment is when we get a 2nd volume increase and a 2nd momentum increase, but that these 2 factors are also confirmed by price action. So that's the important bit. So if we put in price here and we take our volume, our momentum down, so we can see what price is doing as well. And we can see now that price has been tracking upwards and that momentum actually did come down here for a bit. There was this pullback, and we can see that price pulled back. So we know that our momentum and price is closely coupled, and we see that momentum is now tracking upwards all the way up here, still very closely coupled. We can see momentum track up here, And then we can see momentum drop off here for this Sunday candle. We know there's very low volume on Sundays, so that doesn't particularly surprise us. It wouldn't necessarily mean that momentum is going back to the downside because it is a low volume trading day. It's either a bank holiday or a Sunday candle. You can see these low momentum Sunday candles here. But then we get more decreasing momentum on increasing volume. And we get big price movement to the downside. And in terms of price action, we've got lower low closes. It's taken out 2 whole days of trading there. And so that's a very strong confirmation of downward price. But we still are looking for the swing change. So now we can confirm that there's that change. That's change in the swing. Price has moved to the downside. There's increasing volume to the downside. We've got a price action confirmation to the downside, and then we get a second increasing volume spike, and we also get a second momentum spike to the downside, and price has confirmed this by moving down further, and it also has as an added bonus a lower low close. So with all these factors in our on our side, we can then confidently open up a trade to the downside. And if we had done this 34 times in a row since Christmas on 3 currency pairs with slight variation, which I'll go into later, we would have had 100% win so far using this method. Now we can also see that there's this. Just as an aside and just as a sort of general discussion, we can see their support here. Now, traditionally, if you're trading support and resistance, you might think, oh, price is running into support. But if you think about it, price action traders may be looking for price to go back off in that direction, given that they're hitting previous areas of resistance here and here, now turn support, possibly because we've had a bounce here and a bounce here. So they're thinking, oh, maybe we're going to get price going back up that way. But if you think about it, support and resistance will eventually always get broken. And the two things that will make support and resistance break is increased momentum in that direction and increasing volume. So if you get high volume and high momentum, this is a hammer that cracks through the floor of that previous support. So the hammer that we look for always is the momentum hammer and the volume hammer combined. So if you hit the floor with a small ball pin hammer, you're not going to crack it. If you hit it with a sledgehammer, you will crack it. And a sledgehammer is volume. And we've got the momentum, the downward strike, and we've got the volume, the weight of the hammer to be able to crack through that floor. So that's why volume and momentum, and after a swing. So we've got this first swing here of this swing, downward swing period, which is really going to get us going in the direction we want to travel. So that third factor gives us our third golden arrow. So 1 golden arrow for momentum change, 2 golden arrows for momentum and volume, and then 3 golden arrows for previous increasing volume. So I hope you found that useful, and we'll see you in the next segment. Australian dollar and Aussie dollar US dollar currency pair is probably the simplest, easiest and most straightforward trading method for the golden arrow system, and it's a good one to start on, so that's what I'm going to do. I'd just like to show you here that you can see volume momentum is swinging to the downside on all 3 OSMAs. This is on the OSMA 353, 585 and 813.8. And you can also see that volume has increased. So we've got increasing momentum and increasing volume. So for increasing momentum, we give 1 golden arrow, and for increasing volume, we give a 2nd golden arrow. So I hope that's straightforward. So we need all our momentum going down and our volume confirming that by increasing to a higher point than the previous volume candle. So you want an upward slope between those two volume spikes to confirm increasing volume. And you want momentum, all three momentum indicators spiking one way. So these are all going quite clearly to the downside, and we aren't worrying about this zero line. Whether momentum is above or below the red zero line, we don't really care. It's about the direction momentum is going in. So here we go, we've got two golden arrows here, and to get a third, and again we've got decreasing momentum here, decreasing momentum, and increasing volume. So because we've got that, we get two golden arrows, but because there's an increasing volume, price, momentum, movement before this candle, we give it a third golden arrow. So that's what qualifies you for the third golden arrow. And this system is then, we quantify a swing point. So I'm going to look at, when swing changes, I'm looking on the 8.13.8, has momentum gone to the upside, and you can see that it has here. I don't know if that's very clear, but that's where my swing point would get put in. I'm just going to move these upwards so you can see this. So you can see momentum has been coming to the downside. So there's been downward momentum there, downward momentum there, downward momentum there, downward momentum there, and then you can see momentum has swung upwards, and that's where my momentum vertical line is put in, just for easy sake of reference for calculating where we get into our swing. Now ideally, once momentum has changed, as it has done here, we wait for the three golden arrows and then we take a trade in that direction. So we would have taken a trade here, and simplest and easiest way is to wait for a lower low close. So if we'd waited for a lower low close here, we would have got 85 points. We might have gone for ATR as a method, or we might have gone for a candle length method as well. So the method I've used is a lower low close to get these particular results. I haven't checked all the different methods. I've also tried one with ATR, and that had similar results. So that would be the first three golden arrows after the swing, and we would take a trade. We wouldn't take a trade on that particular methodology on this arrow, this candle. However, if we had taken a trade, this would have also won on a lower low close somewhere down there. We wouldn't have traded on this swing. As you can see, there's no confirmation of volume and momentum. I'll just put these momentum bars back so you can see these, because this is quite interesting to look at. Although we get increasing momentum here, here, and here, we don't get volume. And then along here we get a volume, but our momentum is coming back downwards with this arrow spike, so that doesn't trigger a trade for us. And then we don't get, on this next swing here, this downswing, we don't get two successive decreasing momentum. Now you see here there's a volume candle, but what we know is that even though it's green, it's actually less volume than the Friday candle, so that doesn't count. So this doesn't get three arrows, it only gets two arrows, and so on. And then this is a swing upwards here. You can see that momentum swings upwards and there's nothing there, and then momentum swings downwards, and the first downward candle of the momentum change, we've got increasing volume here on this candle, and then we've got increasing volume on this candle, and we get a swing to the downside, so we take that trade and we get a lower low close here. So and so on. So that's how the three candle system works. Now, just to show you, there are some very good results to be had on other types of candle formations. So the pure volume and momentum formation actually on two arrows gives us 20 wins and 3 losses on the first double arrow. In fact, on the first double arrow, not on the first double arrow, on any double arrow. Let me just change that because that's incorrect. This is, so if we traded all double arrows just to demonstrate how powerful a system this is, so you can see there's a lower low close, so that's a win on that double arrow moving downwards. We can see that's a win, 2 wins, that's a win, we get another lower low close, that's 3 wins, that's a treble, so we don't trade that, that's 2, that's 4 wins, and then we get another, that's 4 wins, 5 wins, 6 wins here, 7 wins here. This one, it doesn't close lower, so that's 7 wins, 1 loss, 8 wins, 1 loss, 9 wins, 1 loss, 10 wins, 1 loss, 11 1, 12 1, 13 1, 14 1, 15 1, 16 1, that's a lose, no, that's 3, so we don't count that, 16 1, 17 1, 18 1, that's 19 1. Is that correct? I may have got this loads. 20, in fact, I made it 20. When I was doing this carefully, I made it 20 wins and 3 losses on double arrows. So, but as you can see, it gives you more trades. And if you added those trades to the 15 wins on the 3 arrows first after a swing, that would have given you 35 trades, for instance. That's one combination you could use. And if you just traded the single arrows, you would get a fair number of winners. So here you get a higher close. Do you get a higher high close? So you get a higher close, I suspect, but not a higher high close. No, so if you would have got a higher close on that one, you'd have got a lower low close on that single arrow, a lower low close on that single arrow. On that one, you would have lost. You would have got a higher close on that one, a lower low close on that one, and so on. So the one arrows aren't as good, but they're just trading with momentum, and you can see that that one won, that one won. This one was a winner on a higher high close. This one was a winner on a higher high close. This one won, this one won, this one won, this one lost. You can see your winners do outnumber your losers. And so demonstrate the principle that for every extra arrow you add, you get less trades, but a higher degree of win rate. And you can combine some or all of these depending on what kind of attitude you have to risk. So that's Aussie USD. Now we'll move on to CAD. That has a slightly different approach, but you will see very similar. See you in the next segment. So this is GBP USD, and I must admit I made a slight error. There were 13 wins and 1 loss if you apply R. Now R on GBP USD is RSI. If you apply R at RSI overbought 95 and oversold at RSI 5, so basically if price goes above or below those levels, you don't trade it. So this was the 3 arrow system. If after the first swing, applying R, I'll just put after first swing, and it gives you 13 wins and 1 loss. So it wasn't quite 100% there, as I stated earlier. And then if you just traded all three golden arrows, you'd have 14 wins and 4 losses. If you applied, actually I've got 12 wins and 1 loss. Yeah, so I'm not sure there. It's either 12 or 13. I'll have to go through and check, but basically you need to have if you apply R, then that's what you get, between 12 and 13 with 1 loss. I'm not exactly sure. I'm not sure why I've got that in twice. And then if you just traded a double arrow or treble arrow, the first one after the swing, you'd have 20 wins and 1 loss. So double arrows are still very strong. I mean, in this case, it actually appears stronger than the treble arrow. So I don't know if that's an anomaly or whether that carries on long term. Obviously, more testing is required to decide that. But this system operates just like the others, apart from the fact that you'd put an R in if you're oversold. Say here, RSI is 99.5, so you're overbought there almost to 100%. I mean, it's got 0.5%, but I've generally found if it's below 95, you're good to go, and above 5 on a sell, and below 95 on a buy. So what else is there to say? Yes, I was going to tell you about mixed momentum. So here I developed this system in addition to the golden arrow system. If momentum is downwards on the slowest, I put a black arrow, and if it's downwards on the medium, I put a red arrow, and then if it's upwards on the top one, I put a blue arrow. So this indicates that momentum is generally downwards, but has pulled back. So if you get a downward swing, particularly if you get one after golden arrows, and then you get a pullback, this is a really good place to get into a trade. Why is that? Because it's giving you extra value. So if you'd got in here on a sell, you'd have gone negative for 39 points, and then you would have gone positive for at least double your risk there. So if your risk was, let's say your risk was 40 points, you would have made at least 3 times, 4 times that on that one. So let's find another one. So here's another one. But in fact, this was further down towards the end of the swing. So I wouldn't have taken that. I'd want to take the one directly after the swing. So if there's one along here, so here's one which is 2 bit after the swing. You can see a pullback. Price went up there, pulled back again, and you've got your momentum is to the upside with a pullback. Now it's not on increasing volume, but that doesn't seem to matter. So here's another one actually which is on increasing volume, which is even better. And your pullback, your drawdown is 50, and you easily make 100, 2 to 1 on that one, and so on. So that's this is this 3 arrow system that I'm using. If there's a golden arrow, I don't apply this system, obviously, because it means all 3 arrows are going in the same direction. But generally speaking, where you see this immediately after a swing, it's a good point to take a trade, a pullback trade. So here you can see you had 2 arrows to the upside, but the slowest momentum was to the downside. So that wouldn't have been the best place to get in. But this one here again was still to the upside, so you wouldn't have got in. You might have got in here because you've got 2 to the downside, pull back to the top, 42 drawdown, and would you have made 84? Yeah, well, you would. So you'd have made a 2 to 1 on that one as well. So that's another little technique to look out for. It's not the golden arrow system, but you know, it's just another way of trading this momentum system. So I hope you found that of interest, and I hope this gets incorporated into your trading, because whatever you're trading, I mean, let's look at a 4-hour chart. Let's get this. I think it's all shrunk down a bit. Let's get it. So basically, you want to trade in the direction of the higher time frame momentum. So let's have a look here. So if we go to the daily chart, we can see that there's a one golden arrow is pointing upwards on the 1st of June. So if we see a golden arrow, that means all our momentum is going to one direction. So we then, on the 2nd of June, go to the 4-hour chart. So if we zoom along to the 2nd of June, because we know momentum's going upwards, so we only want to trade upwards. So here we are at the 2nd of June. So this is 2nd of June, midnight, here, at this point here. So we want to trade in an upward direction. So we wait till we get increasing momentum across the board with volume, which is here at this candle. Take the low there and trade upwards. And we would have made a one-to-one, not there, but maybe further along. And, you know, if we just accepted a high close, we would have got out there at 36 points. So that's another way of trading those. Go to the lower time frame and then take the trade. So we know that generally momentum's to the upside. So here's another one, and this one's on increasing volume. So we'd get in here and we'd get a high close there for 39 points. Again, another one here. We'd get a high close. Oops, that moved a bit. Actually, we're on the 5th of June now, but for 78 points. And this one, we still haven't closed below, and we did have it. Have we closed above? Just there, we may have closed above. So we would have come out there. So I hope that makes sense to you, and we'll see you the next. So this is the bonus I promised you, the golden square. If you were looking for a fourth currency pair to trade, of course you'd be going for your old favourite Euro USD, and any 3 arrows, golden arrows, since the beginning of the year, 12 wins, 1 loss, 8 wins, 0 loss, first after a swing, 15 wins and 1 loss, first after a swing, double or treble arrow. Double gold arrow, just a double, 24 wins and 4 losses, that's still 1 in 6, and single gold, 20 wins and 2 losses. So I think you'll agree that is still a very good and healthy win rate. These sessions are free, so if you have appreciated this, please do me the favour of leaving a like and a share. If you can share with anyone, that would be especially appreciated and will help the YouTube algorithm. Now, I hope you get a lot of value from this and that your trading goes from strength to strength. See you another time.